You're asking, will the Russian ruble be a global reserve currency? No. Will the Chinese yuan be a global reserve currency? No. I could give you 100 reasons why, but they don't have bond markets. They don't have good rule of law. They don't have repo, primary dealers, et cetera. They don't have all the things you need to, in terms of having a securities market, to be a global reserve currency. So you can forget about that. But could they collectively issue a new currency? Call it a BRIC, call it whatever you want. They call it a bancor. That they would all accept and trade between each other, and that actually third parties would be welcome to join with an issuing bank and a clearing mechanism and evaluation mechanism. Yes, that would not be that difficult to do. In fact, they're already working on it. So why haven't they done it yet? What's the missing ingredient?
We're delving deep into the profound insights of economist Jim Rickards, whose astute analysis unveils the looming threat of a currency war targeting the US economy. With a blend of historical context and contemporary economic trends, Rickards meticulously dissects Trump's strategies aimed at averting a currency war that's been brewing since 2010. Through critical parallels drawn from landmark agreements like the Plaza Accord of 1985, Rickards illuminates the urgent need for coordinated action to stabilize currencies and prevent potential economic turmoil. However, amidst the complexities of global finance, Rickards issues a stark reminder of the interconnectedness of economies and the risks of failed interventions. Stay tuned for a captivating exploration of the forces shaping our financial future.
Trump wants to start the currency wars, and he wants to weaken the dollar, to promote U.S. exports and export related jobs, etc. So that's the kind of we're supposed to worry because Trump's going to destroy the dollar. First of all, it's not true. That's not what he's doing. Trump is not trying to start or continue a currency war. He's trying to end the currency war. The currency war has been going on since 2010. That's what my first book was about. But I also said in that book came out in 2011. I said currency wars, we're not always in one, but when we are, they can last 15 or 20 years. So here we are, 2024. I'm not surprised that 13 years after the book came out, we're still in a currency war because I said that's how long they can last, and we are. So it's not a new currency war. It's been the same one that's been going on for as I say, 13 years. So, but what Trump's trying to do is end it. His model is what Ronald Reagan and James Baker did at the Plaza Accord in 1985 and the Louvre Accord in 1987. So what was going on then? Coming out of the severe recession of 81, 82, 20% interest rates, Paul Volcker, et cetera, we finally got inflation down to about a little over 3% by 1983. Growth was really strong, 16% compound growth between 83 and 86. The dollar hit an all-time high. If you look at the Fed broad trade weighted index, the dollar hit an all-time high in 1985. Baker and Reagan, Baker was Secretary of the Treasury at the time, just said the dollar was too strong, and they didn't want to trash it. What they wanted to do is get together with Japan, Germany, because remember, we're still in the euro. Sorry, this is before the euro, so you still had the Deutschmark and the French franc and sterling and yen and all that. They met at the Plaza Hotel in New York. They had a conference with the finance ministers, and they agreed on new parities. And they said they were going to intervene in markets to cheapen the dollar, but it was a controlled cheapening, and it was by agreement, it was by consent, and they did it. And then by 1987, the dollar had got weak enough that they said, okay, that's good, let's lock it in. And they met at the Louvre in Paris, and they agreed. They set the new parities, and they agreed to keep it there. And for almost 20 years, from 1987 to 2010, I guess a little over 20 years, that was the great moderation. We didn't have high inflation. We didn't have currency wars. The price of gold didn't do a lot really until after 2000 for other reasons. But you did have great currency stability, and that kind of blew up in 2010 after the global financial crisis. So by the way, the big brain behind this is Robert Lighthizer. Lighthizer was U.S. Trade Representative in the first Trump administration. He was Deputy U.S. Trade Representative in the Reagan administration. He was around at the time of the Plaza and Louvre Accords. And what he's saying is, we're not going to trash the dollar or destroy the dollar. He wants to have another sit down with the G7 members. And, in theory, it would include, they'd invite China and Russia or other large economic powers, and set new parities and move towards them. And it might involve a slightly cheaper dollar, but it wouldn't be an outright war. It would be moving towards currency stability. Now, here's the twist. You're invited to this meeting, and you can work with the United States to achieve these parities. But
Right.
if you're using excess capacity and you're dumping and you're trashing your own currency, then we're going to hit you with tariffs. So your choice is going to be join this currency club with modeled on the Plaza Accord, or we're going to slam you hard with tariffs, which Lighthizer did to the Japanese. That's how he saved the U.S. auto industry in the 1980s. Japanese were taking over. They put high tariffs on Japanese cars. So this is not a currency war. He's trying to end a currency war. He's trying to achieve stability um, and do it cooperatively. But if you don't join the club, you're going to get hit with tariffs. So yes, you can see that coming. Say, who are the winners in that? The winners are people who invest in the United States and workers. The losers are people who are, betting on China or getting their money out of the United States. The BRICS as they are today. So that includes four new members who joined at the summit in South Africa last year. So now we're up to the BRICS 9, I guess, BRICS Plus, call it. They represent over 50% of the world population. If you use purchasing power parity, about 55% of global GDP. Two of the three largest nuclear arsenals, so three of the five largest oil producers. This is not your your grandfather's third world. These are not poor, impoverished third world countries. These are political superpowers, military superpowers, and economic superpowers. So first of all, it's not a trivial group. Number one. Number two, if you're asking, will the Russian ruble be a global reserve currency? No. Will the Chinese yuan be a global reserve currency? No. I could give you 100 reasons why, but they don't have bond markets. They don't have good rule of law. They don't have repo, primary dealers, et cetera. They don't have all the things you need to, in terms of having a securities market, to be a global reserve currency. So you can forget about that. But could they collectively issue a new currency? Call it a BRIC, call it whatever you want. They call it a Bancor. That they would all accept and trade between each other, and that actually third parties would be welcome to join with an issuing bank and a clearing mechanism and evaluation mechanism. Yes, that would not be that difficult to do. In fact, they're already working on it. So why haven't they done it yet? What's the missing ingredient? Well, here's the missing ingredient. So right now, Russia and India, the two of the BRICS members, they're trading with each other, and Russia's shipping, oil and natural gas to India, and India has, doesn't want to pay in dollars, or has difficulty paying in dollars. They can pay in rupees, which doesn't have to go through SWIFT.
Mhm.
So, but the question is, how many rupees does Russia actually need? The answer is not many. And what can you do with them? The answer is not much. And for that matter, same is true in China. What are you going to do with all the Chinese yuan? You buy some Chinese stuff, but there are limits on that. So the problem with bilateral local currency settlement is, if you're the seller and you get the local currency, what are you going to do with it? And the answer is not very much. And none of those currencies are big enough to support reserve currency status. But if you get 10 or 15 or 20 or more countries in the BRICS, now you've basically duplicated the euro, the European monetary zone. Because you can go shopping in 20 different places. So now in this world, Danielle, so I'm Russia, I sell oil to India, they pay me in the BRICS currency, but I don't have to spend it in India. I can go to Brazil and buy aircraft. I can go to China and buy
E-
semiconductors. I can go to Iran
Exactly.
and buy drones, etc. So the key ingredient is not the currency concept, it's the size of the area. And that's what they're working on. And the next BRICS summit
Yeah.
is in
Yeah.
is in October in Russia, because they have a rotating chairmanship. So this year, Russia's the chairman. And Sergei Lavrov, the foreign minister, has been a thought leader in this. Viola Nabiulina, the head of the Central Bank of Russia, is brilliant. So they are moving in this direction. I can't account for what our friend, our Bitcoin friend said, but he apparently doesn't really understand what the BRICS are doing. Not exactly. China's not going to have a gold-backed currency because they're. Uh, by the way, the gold the gold powers, the biggest gold powers in the world, if you take gold as a percentage of GDP, so GDP is your economy, and gold is, I think of it as real money. So take that gold to GDP
Right.
ratio. The two biggest powers in the world are Russia and Switzerland. They have ratios of kind of between 9 and 12% gold to GDP. U.S. is pretty weak, about 2%. China is a fraction of 1%. So they don't have anywhere near enough gold. So, but to your point, Daniela, why are they buying gold? The answer is twofold. Number one, this new BRICS currency may have a gold linkage. Now, I'm not saying it's going to be gold backed. You're not going to be able to take your BRICS currency, march down to the People's Bank of China and say, give me some gold. They're not going to do that. But it will have a linkage to gold by weight. So there's one brick or bank or whatever they call it will be equal to something, an ounce, a kilo, I don't know, but some fixed weight, not a dollar amount, but a weight. Now, the dollar gold market will continue as it is, but in that world, the dollar has to do all the dirty work. Because the dollar is going to be going down against gold. If a brick unit is tied to gold by weight and the dollar price is going up, meaning the dollar is going down, what's happening to the brick? It's getting more valuable. So there would be a strong interest in having the gold. But here's why China's buying gold. And it goes back to what we said earlier about seizing and stealing the Russian assets. Because let's say you're a central banker, finance minister of any country that's running a trade surplus. You're making money. What do you do with the money? It's no different than you or I personally. We make money. We have to decide what to do. You pay your bills, but do I put it in a savings account? Do I buy stocks? Do I buy bonds, buy real estate, whatever? Countries have to do the same thing with their trade surpluses. So do you want to buy U.S. treasuries in a world where the U.S. is stealing them? Probably not. Do you like Japanese government bonds or German bunds or Italian government bonds any better? I don't think so, because if the U.S. is stealing them, why would those other countries be any better? So you very quickly get to gold. It may not be your first choice, but it may end up being your only choice once you get away from these government securities.
As we wrap up today's discussion, let's quickly recap the key insights shared by Jim Rickards regarding the impending currency war and its potential impact on the US economy. From Trump's strategies to historical precedents like the Plaza Accord, we've explored the intricacies of global finance and the urgent need for coordinated action to stabilize currencies. Remember, understanding these dynamics is crucial in navigating the ever-changing landscape of our financial world. We'd like to extend our heartfelt thanks to each of you for joining us today. Your support means the world to us. Don't forget to hit the subscribe button, give this video a thumbs up, and share your thoughts in the comments section below.